Hey everyone, Casey Powers, Day Trading Dynamics. I hope you're doing well. It's February 10th, 2016. I thought I would talk a little bit about post-market trading. Today was absolutely extraordinary and maddening at the same time. There was so much popping off that it definitely stretched me psychologically with Twitter, Tesla, Cisco, Lock jumping off. It was just unbelievable. Tesla was one that I knew would pull back um, at post market, and if you look at this candle here, um, here's where the bell rang at 4. It didn't do much, and basically it just pulled back down to a low of 139, back up to 149. That's huge $10 move here, and then 147 down to 135. I mean, it was just absolutely insane, and I anticipated a pullback, and I did collect on the short side. I got out pretty promptly because I knew that it was going to reverse and head higher. It's really important to recognize the difference between trading intraday and post-market, in that post-market you're dealing with a larger spread, and also you have to use limit orders exclusively, and with that you have to trade a little bit more aggressively to get filled, but nonetheless, if you're committed, you'll definitely get filled. So Tesla had a low here of 135 and a high of 164. That's the type of intraday range that you can expect trading post-market. That's Tesla, and we'll take a look at Cisco. Cisco was another one that had a very nice volatility. Started off slow here out of the gate post-market, and held support here, and then big move up from a low of 22 up to 23 up to 25, and it was just a phenomenal move here. It played pretty much how I thought, and it did what it did. So that's Twitter. I'm sorry, that's Cisco. And I was thinking about Twitter as I was showing you Cisco. Twitter is up next. Cisco, big move, and here is the daily chart on it. Broke right through that 2375 level and continued to head higher. Big move. Twitter, ugly to say the least. Twitter is Twitter, and as far as I'm concerned, it serves a purpose, kind of like LinkedIn, but my hunch is that both of those companies will eventually be bought up by someone bigger, and then the value, their value will be utilized accordingly. But as far as my opinion goes, with both Twitter and LinkedIn, these are companies that served a purpose early on, and if you want to succeed as a business, you need to innovate and you need to market, and unless you're doing both of those things consistently, you're going to fall along the wayside and get eaten up. So Twitter, nothing nice here. from 16 down to 12. The bleeding didn't stop. It was pretty profound, and you know, that's the way you play it. The beauty of it is that if you miss the pullback, you can always catch the bounce here. And as you see, it hit that 1280 level and came right back up to 15s, where it just basically has gone sideways from that point forward. So Tesla was my definitely my all-time favorite. I did mention Locke. Locke had, you know, it had some fair action, nothing too extraordinary. From 11 down to 1080 to 1050s, but it was, you know, I was watching it because I knew it had some potential for some action, but nothing to compare with Tesla. Tesla was my all-time favorite. You know, it's not every day where you see a stock move, you know, from 135 to 165. I mean, that was just incredible. And not only that, but you know, you're experiencing this type of intraday range during a time when, you know, the S&P 500 is really having a difficult time maintaining its composure, so to speak. So when you are in the markets, by no means discount pre and post market trading. However, if you are going to trade pre and post market, you better know how to trade intraday, because the moves that you experience post market can blow up your account and take you out of the game pretty easily, as far as I'm concerned. So with that, you definitely want to consider what you're doing. My belief is that if you're not proficient with intraday trading and you have any reservation whatsoever regarding entering a trade or what, my suggestion is to focus on what you're strong at, whether that be trading on the long side or short selling, or playing stocks with lower volume, whether it be trading futures or what. But you know, jumping into post-market, no question in my mind, I mean, there's a lot of money to be made, but at the same time, you have to be willing to be comfortable with risking several points. I mean, you know, if you're not willing to risk $3 or $4, and then it's not even worth it, because as you see the size of these candles here, I mean, like I said, you have a low of 135 and a high of 147. So with that type of move, you know, you can, if you set your stop, your mental stop, too low, too high, too premature, then you'll be taken out really quickly, and it'll just continue to head up or down or whatever it's doing. So you have to pay very close attention to the intraday range, and recognize that the customary intraday range that it demonstrates intraday is not going to be the same as how it plays post-market. So just when you think you know how to play a stock intraday, you know, you play it post-market or pre-market, and you find that it plays radically different. Okay, so let this stock, you know, teach you the potential that a stock has intraday, post-market. All right, I mean, to jump $30 per share and to continue to head higher, let me just say that, you know, it was believed that this stock was going to pull at 150s, and as you see here, it did not. Okay, and with that, it went up, pulled back, went up, pulled back, went up, and just when everyone thought that it was good for a short, it headed higher, 15 more dollars. Okay, and with that, like I said, you better be comfortable with risking a couple of bucks or more for the potential profit of even more. But if you play it foolishly, then you can blow your account, and you'll be sitting on the sidelines for quite a long time. So recap: that's Tesla. We'll look at Twitter, big pullback, post-market. Cisco, huge move up, significant move, awesome play. The S&P 500 fading off here, trying to hold on to that 180 level, and as far as I'm concerned, it has room to go. It's got this bottom here that it's been trying to defend against for quite some time here, this 180 level. And as far as I'm concerned, if you look further back, it definitely has more room to go, but I can't really say what's going to come of it. But what I can say is the year's still young, and as far as I'm concerned, the S&P has more room to go, and I'm going to be playing the markets accordingly. Casey Powers, Day Trading Dynamics. Take it easy.